Hi traders, welcome to a new educational video on the channel. Specifically, we're going to be talking about volume profile today and something that I haven't really dwelled deep in YouTube before. I do talk about this a lot on my trading courses, so this is going to be just a little quick introduction to this topic, and it is the stop loss placement. Okay, today we're going to talk about how you can use specific elements in the volume profile in order to have the best placement for your stop losses. Okay, so very quickly here we have a volume profile, and let's just go over the elements very quickly again. So you have the point of control, which is the point in the whole profile that has the most traded volume at this specific price level. Remember, volume profile measures volumes on the vertical price scale. We're not looking at volumes by time on the bottom time scale. We're looking at the right side scale. Then we have the high volume nodes, which is the areas where we see price volumes accumulating and sticking out. Then we have our low volume node areas, which is basically the edges of the high volume nodes. These are the areas where volumes are going to be dropping off on the profile. And then finally, we have the valley area, which is represented here by the darker gray. This represents where 68% of the total volume from the beginning to the end of the profile was traded. Okay, and in this valley area, we have the valley area high, which is the upper barrier, and valley area low, which is the lower barrier. But for this video, we're actually only going to be focusing on one element of the volume profile, and that is going to be the low volume node areas. Okay, I've already talked about how these are my favorite areas to look for trade entries, but this is also going to help us determine where the best place for our stop losses are. Okay, so for example, if we have a day that is very rangy, if we have a day that the chart looks something like this, then we obviously know we're going to have a very wide, balanced volume profile. Okay, so on range days, the name of the game is fading the edges. Now, the key, obviously, it's to get in tune with the market and help and identify exactly what kind of day we have where we're going to be looking for short entries at the top edge and long entries at the bottom edge. And in this case, your protection should go just beyond buy stops, just beyond the upper edge of the high volume node, and sell stops just beyond the bottom edge. If we have, by contrast, a strong trending day, one of those days where we have, a lot of consolidations and then moves back and forth and just grind and grind up, well, we would have a profile that would look something like this. We would have a high volume node, low volume node areas, another high volume node area, and then, we would have something looking like this, for example. So in this case, we know that the most logical place to put our protections is going to be right beyond the low volume node areas that we start to form on the profile. And we're going to go into the charts and look at some examples. But as the market keeps moving, you can keep trailing your stop losses just behind the low volume node areas that we are establishing. So if we go, this is an example And I'm going to talk about this for all different kinds of markets. So here we have Australian dollar, US dollar, Forex 5-minute chart. And again, I know Forex markets are not a centralized market. They don't have accurate volume readings like CME futures, but still, trust me, the volume profiles are very accurate in this. Okay, this is in TradingView. And so I'm using basically a session profile, which is equal to the entire day. So coming in from the 5 p.m. Eastern time open to the 5 p.m. Eastern time close. So we have here this day, we had a very strong trending move here right into the London Europe Open. And then we started establishing this high volume node here. Now, obviously, this profile is going to be developing as the market goes. So if we go like on a replay mode here, let me put this here and let's just hit play and make this a little bit faster. Oh, well, 1 is fine. So you can see we're already establishing support here. So now we come back and we establish support again. This is the second time that this area has been holding. So now at this point, we have a well-defined high volume node. So then I would immediately identify this low volume node area right below the high volume node as a significant area of support. So on a move back here, if I'm looking for longs, my stop loss is going to go right below this zone. And again, you can make this even wider if you want to be more conservative. We started off here, but we can take it all the way down into here, for example, which you can see this was the last little resistance before we had a push up. So in this case, let's say I take a long position. Let's say I'm going to get long again if we come around this low volume node edge here again with our stop loss just beyond this area. And, we could target the highs or we could even target right here, which would be, an over-under pattern as well. So let's say I'm going to target here to be a little bit more conservative. So let's hit the replay and let's just keep playing. And we'll have the market coming down here. Let me just accelerate this. So we would be getting in there. And you can see we're chopping in that area, but it is levels that are still giving us a good support. Now, obviously, I know this is a hindsight example, but I'm just trying to explain to you the mindset behind this, okay? So we have a day that is obviously on a strong trend up, and we're establishing a heavy high volume node here with a big area of support right in this area. So we got our entry points areas here, and our clear invalidation will be right below the low volume node area on this level. Let's go into another example. Let's go into NASDAQ. So this is NASDAQ. This is a 1-hour chart. And if I zoom out, this is a long-term. This is actually where I have anchored my long-term volume profile on NASDAQ right now, which is coming from right here, June 2025. We are near all-time high areas. So there's really nothing here on the left. So as long as we are above this 22,900s, this is pretty much the area that I'm focusing on to establish my high volume, my profile for the long term. So if we zoom in, you can see here on Tuesday, we got a very, very nice bounce here on this 10 a.m. candle where we came down right into the bottom edge of this node. So this is applicable, and I want to show you this because you can use this for intraday, for longer term swing trading. Just by looking at this chart, you can immediately see, if I get a horizontal line, you can see we had support right here before. This was on the low of Monday. So if I establish this level right here, and let me make this in gold, this is a very important level that I've been tracking, and this is one of the levels I have marked off on Sierra chart, where we had very strong support, broken down. We did go back up above, but then we broke down again, breakout support, breakdown, come again, support, and now today we had a really great reaction there. So right at this level, immediately I would be looking at this high volume node, and you can see this was the range of Monday, Tuesday. So if I apply a weekly profile here as well, like if I do an anchored profile from 6 p.m. on Sunday, and I just change the color of this, you can see we have a very wide weekly profile as well. Let me make this shorter. So right there, we have an overlap, long-term high volume node and the weekly high volume node. In both cases, we have a strong area of support right at this bottom edge. We can even bring it up here if we're looking at this weekly profile, okay? So in this case, same thing. If we're looking for an entry here, let me mark this right here actually. So let's say we would take this as our overall low volume node support zone. You can see we're lining up the bottom edge of the, let me change colors, bottom edge of the weekly profile, there, and the bottom edge of the long-term profile there. So this whole range encompasses both the weekly and the long-term. We can see we are at a very important level here, and we're coming back to retest it. So any entry now, if I'm looking for an entry, let's say we put it right here at this edge. Target would obviously be all these three equal highs that we have here. And then the stop loss placement would be just beyond this low volume node area. Okay. And again, we're not going into the nuances of the entry, because for the entry, there's a lot of different elements. There's price action patterns, the high volume node edges. We got also order flow. You can be tracking here. Look at the footprint to see if we have absorption, volume profile delta, etc. This video, we're focusing on the stop losses. Okay. And you can see here 2.4 R&R. Okay. So this is a very logical area to put our stop losses based on a combination of volume profiles there. This is the gold futures market, GC, which has been on a tear, making new all-time highs. Here we have a really, really nice example of a long possible entry. Here we have the volume profile in black that is pretty much coming from this breakout point right here all the way up to the present. So same thing. Right here we had a really, really nice trade example where price came up, We did have an over-under pattern here, which gave a little pullback, but then you can see price coming right back up. Here we have a lot of elements lining up. We're establishing a ascending triangle with compression up to the apex. We have the breakout. We break previous high, shift market structure to the upside. We could even take a Fibonacci, and you can see we have a pullback right into the 0.6180. But if we look at the high volume node, and let me actually anchor this. Well, we'll just leave this one here, and then let me get a anchored volume profile coming from here all the way a fixed range, going all the way from here, going into, let's say right before this retest up to this highs. Okay, so we have here this profile, which is going up until this point, and let's say we're looking for a long entry here. We have broken resistance, long-term volume profile. We have very clear high volume node here. Then on this one, very clear high volume node as well, right over here. We actually didn't quite get the retest of this broken level, but we did come into the low volume node zone. And so the same thing. If we're looking for a long position, let's say we would be looking at it right, over here, which did not actually test, but we would target the highs right here and the stop loss. In this case, since we are looking to enter on this retest and we do have this high volume node here, then our stop loss can go just beyond the bottom edge right here. For the target, we're at all-time highs, so you could have just kept trailing this up. But the main point is that we would use this high volume node and we want to put our stop loss right beyond the next main low volume node area. This is the area for our entry. So our area for our invalidation would definitely be right beyond the bottom edge of the high volume node that we have right over here. Thank you for tuning in, and I'll see you all in the next one.